we make money in the real estate business, in a constrained supply environment. So when, if you're on the west side of Los Angeles, that's a constrained supply environment.
Yes.
And so the real key to making money in the real estate business is a constrained supply environment. And this is what's going to happen in California. As we don't have enough water to water all the farm ground. The kind of the thought is that it depends on who you talk to, that we're going to lose between 750,000 acres and 1 million acres of farm ground.
Hey, welcome back to the Signet podcast. This one is a fun one. I personally don't have that much experience with farmland real estate, but when Mark Crawford from Land Income decided to come on my show, I was really excited to hear what he had to say. This is really insightful. We talk about farmland as an investment, as well as a host of other considerations, including water shortages and supply chain issues. Please enjoy the show, and please hit the like button. It really goes a long way in helping the show. Mark, I really appreciate you taking the time to meet with me and to introduce me to something I'm really not familiar with. I do think it's a big part of the future in real estate investing, and given everything that's going on in the world, I think this should be a really fun conversation. How'd you get started in real estate in general? What's your story, your background, and...
Well, first, thanks for having me and coming and schlepping all the way up to the valley, all the way up to Visalia. So
my pleasure.
Great to have you here. Well, I got started. I came out of school in the Carter years, and there was no job. I had no jobs in agriculture. I went to school for agriculture. Okay. So my first job was in Century City. I went to work back in the day. They had SBA loan packagers. And the SBA loan packaging business was basically a real estate backed deal. So I started by learning my real estate there. And then, if you can remember, long enough ago, there used to be a company called the John Douglas Company.
Yeah. Okay.
And I went to work with Chris and Jack and John. Jack, which is John Douglas, is Jack. And went to work with them when they started that, and that's kind of how I got into the real estate business.
Was that a specific niche, like apartments?
Well, we did. Yeah, I did. I worked the Palms area back in the day, and sold apartments.
Wow.
Sold apartment buildings and duplexes and all that kind of stuff. So that was it.
So how did you go from that to making your own, sort of buying land and farming? What is the transition?
Well, I mean, there's the story in between of how we got there is that Santa Monica passed rent control, and I moved to Houston, Texas, no zoning at all. Right. That's where I met my lovely wife, and wonderful, and so I started there, and I started just like everyone, kind of, at the bottom. Where you renovate a house or two, and then we built a duplex or two, and then we built a little bit of townhouses. Okay. And then the big crash came in Houston, and then from there we went and stayed in the entitlement business for a long time. I went across the country and did the entitlement business. And we tried to get in front of, back in the day where there used to be tax credit apartments. We used to try to get ahead of those guys and buy the land and entitle it and then flip it to Trammell Crow or Lincoln Properties or someone like that. So that was kind of the genesis that got me, really into the real estate business. I did those kind of on my own with just some high net worth individuals. And then we ended up back in California, started the same thing, kind of doing single-family homes, and then right in the crash, 2008, 2007, got into the hard money business.
Oh, okay.
And that was kind of the thought of the hard money business, is kind of try to get investors that would be interested in getting into the investing in apartments.
Okay.
And it took from 2007 really to 2011 for the properties to, as you know, to come down far enough, where the rents needed to burn off and adjust the price. So we started. We bought our first property over on Carmona, off La Cienega by the Target.
Okay.
In 2011, and we went from there, and we assembled 400 apartment units in the Baldwin Hills neighborhood.
Wow. Okay.
I did those with Steve Bram of George Smith Partners.
Yeah.
I'm sure
Yeah.
many people will know Steve. Steve was a partner in those. We bought 30 some buildings, 400 units.
Wow. Okay.
$100,000 a door.
Wow. Oh, God, you can't find that these days. That's great.
No.
Yeah.
No.
California's gotten a little crazy with prices.
Yes.
But okay. Well, so do you have a background in farming, or what's?
Well, I went to
Agriculture.
I went to school for farming, but I through high school. I was in 4-H and FFA, which is Future Farmers of America, and I started to get, I had a chicken project, and then a lamb project, and then I had a beef project, and then I went to Cal Poly San Luis Obispo and studied agricultural business management.
Wow. Okay. What brought you to that? How did you hear about that? What piqued your
There's
curiosity?
they say in the ag business, you have, it's one of those things, you have it or you don't.
Right.
I mean, you just
Right.
you do or you don't. It's just
Mm-hmm.
you're either like farming or you don't.
Right.
It's hard to, I don't know how to explain that.
It's where your heart is, so that's what makes it interesting.
Yeah.
That's why I was wondering what your background was. But compared to a traditional real estate deal, because you did apartments, what are the similar processes in looking at farmland? Because I've never actually looked at land to do what you do. So I'm wondering, there's always parallels, whether it's industrial, retail, similar ingredients. What ingredients are there in farmland that you look for?
Well, if you looked at the offering deal that we do, and if you look at the book that we make, the syndication book, just that you would normally see for an apartment building or whatever, if you put your hand over where it says, almond orchard development, it's identical.
Right.
The deal's really identical. We are buying a piece of property. In this case, in our almond development deals, we're going to develop the property. So we're going to plant the almond trees.
Okay.
But the benefits of we own the property, and it can appreciate in value. We have the trees. We could depreciate the trees.
Oh, really? Wow. Okay.
And it cash flows.
Okay.
In our almond development deals that we do, very interestingly enough, we're able to deduct the entire cost of the development of the trees. So all the planting of the trees, we get to deduct those.
Over how many years?
First year.
Really? Wow.
Right. Yeah.
Okay.
So in the deal we're doing now was called Woodbridge Almonds.
Yeah.
The development cost is about $8,000 or $9,000 an acre.
Okay.
And so if you invested with me, I would send you a 1099 with 100% of that deduction.
Okay.
We like to say that the original lobbyists for agriculture were George Washington and Thomas Jefferson.
Yeah.
Yeah, because it is filled with interesting tax deductions. That's called Rule 179 of the code. If you build a barn or lots of some stuff like that, you can deduct that in the year. So in this particular case, for a $10,000 investment, you're going to get a 10K with about $2,500 of passive loss off the first year. Very nice.
Wow. Yeah, that is really
Very,
nice.
very, very nice.
Yeah. How come almonds, like as opposed to other agriculture?
Well, you have to back up a little bit. There's two types of crops.
Mm-hmm.
There's the row crops, like corn and wheat and vegetables and those kind of thing. And then there's permanent crops. That's what we invest in. The permanent crops are like almonds or walnuts or grapes or pistachios, something like that have a longer life. The two differences is that the row crops have a low cash return, and they sometimes have a higher appreciation.
Okay.
And the permanent crops have a higher cash flow and maybe not as much appreciation.
What do you mean by appreciation? Like
just the value of the land going up.
Oh, okay.
Right now, particularly in the last couple of years, Iowa farm ground, has gone up 30 or 40%.
Okay.
Now we've really seen the same thing with California agricultural land, but that's kind of how it goes. If you have invest in say the Gladstone REIT or Farmland Partners, both those guys do a lease deal, and this is the difference kind of between the two.
Yeah.
They do a lease. They go to a farm. It's like a triple net lease. So it'd be like realty income, or any of buying into a triple net lease deal. Those are triple net leases. So they're getting a 5 or 6% return from the farmer. Right. They're stepping on it with some debt, doing some arbitrage. So you're getting a low cash return, but it's a lease deal. Okay. Our deal is not a lease deal. Our deal is very much similar, like operating an apartment building.
Right.
Where we own the apartment building, we hire a local farm manager or a local property manager, the same sort of thing, and we own and operate the business.
That's kind of one of the questions that I put on here was, so in a way you're the tenant also. You're doing the real estate, but you also do the operations of the trees. Almost like the trees are your units, but you're involved in a lot of the farming aspects of it. That's part of the
we have, we hire just like you would if you were buying a property in Salt Lake.
Right.
You would hire a local property manager.
Right.
It's the same thing that we do with the farming. We hire a local farm manager.
Right.
It's pretty much the same sort of thing. The duties, responsibilities, kind of, the farm manager does the day-to-day plowing and irrigating and that kind of thing, and we help with the decisions and the financing and that kind of thing.
So you mentioned something, and I think this is super interesting that you were talking about how it's not correlated to stocks and other equities, and how does it work with the recession or with anything like that?
Yeah, and we should note today is May 19th, 22. The stock market for the last couple of days has been in has tanked. Yes, this is the agriculture is non-correlated to either the stock or real estate, and you could look at the Sharp index and all that kind of stuff, but it is just not correlated to it. People eat.
Yeah.
So it's just a different deal. And I think if you go back to the last recession, very interestingly enough, you'll see that farmland did a whole lot better than even real estate and the stocks during the recession. So farm does substantially better during the recession than stocks or bonds or even real estate, which you would think, and other things that you would think would be an inflation hedge. Farmland's an excellent inflation hedge.
Interesting. And what percentage of investment do you have in agriculture of your own personal? Are you 100% agricultural? Or?
No, we have about we have a ranch here.
Okay.
We've moved from Beverly Hills in October up here to Visalia. We have a ranch now where we have a few cows and some citrus.
Yeah.
We have those little mandarins, those little
the
cuties.
ones?
The cuties, yeah. We have little cuties.
Yeah.
Yeah, we have the cuties. And so I think if you add it all up, I think now we have about 40% of our portfolio in agriculture, about 40% in stocks and traditional stocks and bonds.
Okay.
and then we have about 10% in multifamily, 20% left in multifamily.
That's a pretty good diversification.
Yeah, I think. Yeah, I think it's good.
Is there? I don't know much about the water shortages in California. How does that affect your business and the stability or long-term prospects?
Yikes! It's a yikes. We're in the third year of a drought.
Okay.
And it's not good.
Mm.
It's both the biggest problem, Eduardo, and it's also the biggest opportunity.
Oh, really? Okay.
So the short story is that if you invest in California farmland with very good water,
right,
you're going to do really good.
Okay.
It's I don't know if it's buying an apartment, but building like with a great location.
Right. Right. Yeah, of course.
It's like
the resources. Yeah.
Yeah. It's just when we make money in the real estate business, in a constrained supply environment.
Mm-hmm.
So when if you're on the west side of Los Angeles, that's a constrained supply environment.
Yes.
And so the real key to making money in the real estate business is a constrained supply environment. And this is what's going to happen in California. As we don't have enough water to water all the farm ground. The kind of the thought is that it depends on who you talk to, that we're going to lose between 750,000 acres and 1 million acres of farm ground
because of the loss of water.
Because of the loss of water, that's going to have to be followed.
So where's the opportunity?
Well, you buy land that's going to have great water.
Okay. Wow. Okay.
Yeah.
Do you have to be further north? Because
that's exactly right.
Okay.
Yes.
Okay.
Yes. So people ask me, where do we, what's our thesis of norther?
Right.
Our thesis is norther.
Well, it's closer to the origins of the water, so that makes perfect sense. Okay.
You're just using a little common sense there. Yes.
Yeah.
So it's we're doing our third almond orchard development in the Delta.
Okay.
So we're right there. We're right there with the water, with pre-1914 water rights. And
okay. What's that mean? What is that?
Well, there's water law is there's the saying whiskey's for drinking, water's for fighting, and water law is a long thing, but you try to find not only where they have good water, but you have good water rights.
Right. Okay.
And the gold standard of water rights are called pre-1914 rights.
Okay.
And it'd be you need a water attorney to go past that.
I've never heard of that. I mean, I've heard of mineral rights and I've heard of water rights, but that does sound interesting. I mean, that's your business. You know.
Yeah, I think if you in the long term, I think if you were going to invest with me, you said, well, okay, we'll invest, and we're going to invest, many times. And I would tell you probably we might make more money off the water than we make off the ground sometime in our, in this cycle.
Right. Well, and that is really a supply constraint. If it's there's certain parcels that are designated pre-1914, that's going to be forever. So the supply and the demand is going up. Supply is going to stay the same. That's a huge economics 101, supply demand valuation. So.
Yes, so we pay, I mean, just to give you some numbers though, what they're paying for water, if you looked at the newspaper today, water might be $2,000 an acre foot.
Okay.
We sold some water on a ranch that we have in this neighborhood last fall for $1,300 an acre foot. Our cost on Woodbridge is $26 an acre foot. So for $26, we're buying 326,000 gallons of water.
Wow.
$26. So that's a tremendous advantage.
Yeah.
Being to the north to the south. Along with that, we have been putting in a new orchard that we're putting in the state-of-the-art irrigation and all that kind of thing. So it really goes to, not only do we have great water rights, but we have a tremendous cost savings, low-cost producer kind of thing, being north to south.
Low cost. Do you Do you do drip irrigation or?
Yes.
Okay, because
Yes.
that I hear is like very efficient use of water.
Yes, yes.
And
The
it's
Israelis
less
net.
cost.
Most people use the net, whatever it is.
Natam?
Net. Yeah. So the
He
name
just
is-
actually spoke. The guy who created that in Colorado at a nonprofit thing.
Yeah. No, that's they started that. That is a yeah. I mean, most. I don't know what we're buying for this one, because that's what we use, all drip irrigation, double line drip irrigation.
Okay, interesting. That makes sense. So just what's the process of buying? Like if you syndicate a deal, you bring a deal to market. I know you have one that you're syndicating right now. I don't know if it's fully subscribed, but I think it was a 10-year hold period. How does it work over the 10 years?
Well, the property that we have now is to be our third almond orchard development in the Delta. We are starting in the next couple of weeks. We'll start to prepare the soil, and then one day this fall we'll plant it. We plant about we'll put about 18,000 trees on 115 acres.
Okay.
And just as an aside note, an almond tree it has a rootstock, and then it has a variety on top of it. There'll be two or three different varieties. So we'll plant those in the fall, and it takes about to the third year. We'll call it the third leaf.
Okay.
And it kind of breaks even.
Okay. Yeah.
There's kind of break even-ish.
Yeah.
And then in the fourth year, you kind of go, and then the fifth year you're rolling.
You're cash flowing.
You're really cash flow. So, and the financing is very similar to getting an apartment deal, apartment loan. You put your money up on day one, then you build the apartment building, and then you go up through the lease up period. And then sometime during, at the end of the lease up period, 36 months typically,
Right.
your loan kicks in and you start to amortize. So yes, the loan is preloaded with interest carry and the construction costs for that 3 years. Almost identical to a commercial real estate deal.
How dependable is a future income? If there's we were talking about macadamia nuts before, and how if you have a dry year it could kill the tree because they're very delicate. How for almond trees can you be certain that they're going to grow? Like, is there ever a bad year that could kill the trees?
Well, there's two. I think there's two parts of your question there. One was about water, and the other one was about diseases.
Okay.
Yeah. So there's huge multinational companies that are going to sell you stuff that is going to prevent you from getting your trees killed by disease. You're more likely to lose the trees from some sort of genetic thing in the breeding of that particular variety.
Okay.
That's than having some pests come in and wipe you out.
Right.
It's probably not going to happen because you have Bayer and BSF and all those people.
Right.
The other part of your question was water. Well, yeah, water's a big.
Yeah.
It's a problem. Almond trees need water.
Yeah.
They use about 3 acre-feet of water, which is kind of in the middle of the whole cycle of things. If you hay and vegetables and that kind of thing use 4, 5, or 6 acre-feet, and some other things use less.
Okay.
So almonds are kind of in the middle.
Interesting. One thing I'm curious about, just to give, I guess, the audience and everybody a idea of returns on this kind of thing. Today, apartment building returns or commercial returns can be anywhere between, I guess, 3.5% to 7 or 8% yield on the purchase of that kind of asset. How does almond farming in general and our almond trees, how does that compare?
Well, if you look at the if you look at a 20-year track record, the CREF index or any of those index, and you look at Farmland has about 11% return.
Wow, okay.
Which is just as good as stocks and bonds and, whatever.
Yeah.
It just is right there. The great thing about that is, back to the non-correlated, is that as those other things, you'd be able to get something that has that good a return is not correlated. For your portfolio, it's really a good good thing. The returns on our deals today, we do the same as many. Well, we try to be very conservative as our with the numbers as that we go. We have about a 10% IRR on them today.
Okay.
And we have in the low single digits, kind of average return, 6, 7, 8% return, depending upon the almond price.
Right.
We particularly use a particularly low almond price. We think with the constrained supply environment that we're going into, with 2/3 of all the almonds grown today, Eduardo, that are south where all this water issue is. Yes, it's where we think there could be a dramatic difference in what the almonds are worth. We think our price that we use in our 8th, 9th, and 10th year, we think those prices are just really right around the corner, and that makes these deals substantially better. But we have to take the price that we are today. We put a nice low inflator on them, and run them through. But we really do have a very constrained environment.
Right.
And this constrained environment is, I have to mention, is really has to do with the whole global situation.
Right.
In 2050, we're supposed to have 10 billion people on the planet. And what we don't understand is that between now and then, depending on who you want to look at, but we need like 50 or 60% more food production. But I don't even quote how much land we're losing every day or hour or whatever, because it's just phenomenal. But we're losing land, we're losing farmland, we're losing the water, we don't have the water to water it. So the interesting statistic is that the amount of farmland per person is going down dramatically, and the yields over time are not going to make it. The increased yield is not going to compensate for that. So we're having this huge amount of people, people that need food, and then from the developed world, we have all these people coming into the middle class.
Right.
Well, all these people in the middle class, this is what's really driving food prices.
Right. Yeah.
So this era of low food prices that we've had for forever is rapidly coming to an end, because there's millions and millions of people in China, and there's millions and millions of people in India and around the world that are coming into the middle class that have more disposable income. They're going to bid up the cost of food.
Right.
So just what's happened in the last year or two, and it's just not having to do with supply issues. The cost of food is going up and has been going up. All you need to do is talk to the person in your family that buys food and ask them, do they think food is going to get any cheaper?
Yeah.
And I've never talked to anyone that doesn't say, well, oh my God, no, it's getting more expensive, every day, and has, for a long time.
Right.
As I asked my wife the other day, the old Trader Joe's bag,
Yeah.
back in the day, the Trader Joe's bag was, $10 or $15, then it was $25, and I asked her if she could get a Trader Joe's bag for $50, and she looked like, well, you're just stupid. You just don't know what you're talking about. Well, it's just there's nothing in the bag.
Yeah.
So I think the context really has to be is that this exactly what this happening in California, the constrained supply, losing farmland, losing water, is exactly what's happening across the globe.
Yeah.
And we have more people with more money bidding up the price of food. So that's the environment that we're finding farmland, and that's why we have like the largest farmland owner, the just strictly farmland, is Bill Gates. He owns 245,000 acres of farmland.
Yeah.
Jeff Bezos, who's just, really ramping up his money. His money has 420,000 acres of land.
Yeah.
This is what's happening. Bill Gates looks all around the world and understands that the farmland and food is going to be an important thing. This is going to be an important issue as we go forward.
Okay. That's very interesting. I mean, that's kind of one of the reasons I thought it would be really interesting to chat with you, just because, I listen to other podcasts, I drive a lot, and when I'm in the car, that's what I do, and I want to learn about what other people are doing. Real estate, in a way, I feel like has gotten very oversaturated with investors, and you really have to be creative in your approach to investing and finding where to do deals, where to put your money, and it's important to diversify, and you have to have an edge. And so this is something that I started seeing, and it's interesting that there are a lot of trends going in its favor. So yeah, I think it's interesting. Do you have an investor profile of somebody that you like to work with, that you bring as an investor? Is there somebody who shouldn't be investing in farmland?
Well, I think the investor, I don't know who shouldn't be investing in farmland. I think, everybody needs probably a little, it's good to have a little, but I think the people who are interested in it, as we were talking before, is this whole group of people who are interested in food, who understand food. I don't know if there's a profile. I think the people who invest with me are the ones that are the ones that shop at the grocery store.
Yeah.
I have an investor who gives me, every time I call him up, he tells me what he has one of those guys who can photographic mind or whatever. He tells me what the price of a bag of almonds is at Costco.
Yeah.
So I think a lot of people understand, understand the price of food. But I think if you have, especially today, today, the stock market and, today, and the high asset prices today, I think having something in your portfolio that is not correlated to the real estate or not correlated to the stocks and bonds, might be a good thing.
No, I think it's interesting. What you're talking about also with food prices is the whole supply chain problems we're having. Does that affect your business? Because
the almond business right now is being crushed by the supply chain issue. They call it container-geddon or whatever they're calling it. Yeah, with the containers. Yeah, so a container to India or China was $3,500.
Right.
Now it's $15,000 if you could get a container.
Yeah.
So we're having a heck of a time selling almonds. We can sell the almonds, we just can't get them to China or India, or we can't export them. So we're having a big problem with the almond business.
Interesting. Okay. Do you ever look at land to warehouse for future development for other purposes? Or?
Well, 20 years in the 20 years in the entitlement in business, and I've entitled many a 250 or 300 unit subdivision and entitled numerous apartment deals. Clearly know how to do it, but that's just not our business today. If it ever gets, if we ever see one that will work, it will work. Now, having said that, the Woodbridge deal that we're just finishing up the raise on is 3,000 linear feet of frontage on I-5, just north of Stockton, right off the exit. I don't have any children, but if I did, I would say that my children would sell it to a housing developer.
Right.
So that deal will not. I don't know that we'll sell it to a housing developer, but we'll sell it to someone who thinks they can sell it to a housing developer.
Right.
That's what that deal will go. I would imagine someday, someplace, we'll find one that works. But we're really concerned about the farming economics.
Right. Of course.
If the premium was just a touch, we might do it.
Right.
But generally, the premium for pre-development land in today is now. Now, if we go into a recession and things go, maybe we'll find that we can certainly do that.
Does your cash flow depend on on your deals? It depends on the price of almonds.
Correct.
Yeah. Okay.
Yeah.
Is that very volatile?
Yes and no. I mean, it has been because with the container issue,
Yeah.
The container issues, it has been. But it's almond consumption is going up 6 to 8% a year.
Oh wow. Okay.
So we know from our late nights, our Excel with the apartment building or whatever, if we put into the top of that deal that if the rents would go up 5 or 6 or 7, 5 or 6% per year, that deal's golden.
Oh yeah.
Whatever we paid for it, it's just like it's going to work like a champ. You put 5 or 6 on the top line.
Yeah.
You put some leverage on that deal. That deal's going to work. That's kind of where we're at with almonds. And almonds have really flipped over now from being not a snack food to being a ingredient.
Oh yeah.
And this is very different. We one of my favorite things is almond ice cream.
Oh,
I
okay.
just love almond ice cream. And anyway, so and then this whole plant-based stuff. We have a processor, Treehouse. That processor sells less brown skin, which they call a raw almond brown skin when they sell them. They say they sell most of it as a value add stuff. So it goes out. So maybe half goes out the door as brown skins. The other half goes out the door as something else in some other product.
Right.
As a syrup, as whatever. And of course, this whole plant-based thing is very good. Another just a fun fact about almonds is people are generally not allergic to almonds.
Yeah.
It's just kind of one of those things. So it's really a great thing to put into a product if you're looking for, like you're doing, that's a bad example, but an aspirin. So it's got how much aspirin in it, and then it's got whatever the filler is to make it so you can have they're finding a lot of uses for almonds as that filler because people are not allergic to it. Just one of the many things. And we have the California Almond Board. It's a fabulous advocate for the sale of almonds.
Okay. Yeah, I mean personally I love almonds and I think they are super resourceful for so many different
And I do have to mention though, if you do invest with us every Christmas, you'll get a huge almond box of the best almonds that you've ever eaten in your entire life. And then you do have, as your gift for coming up with us, we have some chocolate covered almonds for you that are pretty splendid.
I'm super excited about that.
Yeah. So yes.
Thank you. Well, to wrap it up, I think, what are your daily habits for, that keep you succeeding and keep you focused in your life?
Well, I meditate. It's hard, but I say it's hard sometimes. But I meditate. I take a walk. I take a walk every day at lunch. I call it my mental health walk. And I try to do at least 2 miles a day.
Wow, that's a nice walk.
It's a nice walk. Yeah. And then, since we live in the country, I feed my cows in the evening.
That's got to be cool. It's so interesting.
Yeah.
I want a ranch one day. I think it would be really great.
It's fun.
Yeah. Do you have any advice for, upcoming investors people that want to get into real estate or investing in general? What advice would you give them?
Well, I think you can't start at the top. You have to start at the bottom. You have to start with the house. So if you want to be a real estate investor, you have to go out and you have to buy a house and you have to get it renovated and sell it, and and work you have to work your way up. So I don't think there's any shortcuts.
Yeah.
And I think you have to have some common, just hard work, common sense.
Right.
Goes just a long way.
Okay, well, Mark, I really appreciate coming up here, giving us your time, letting us be at your office, and we'll be in touch.
All right. Well, thank you for coming by. I appreciate it. Talk to you later. Thanks.
All right. That's great.